Hello and welcome to Copytraders Club, where you can learn how to make more money copy trading. I am Gavin Macaulay, my name and username on eToro. Like you, I copy trade, and together we can learn from others how to do it better and have some fun. Here we go! Welcome to episode 4 of Copytraders Club, and we have another historic first. This is our first ever conversation with a copy trader. I'm hoping it is the first of many, but this is no ordinary copy trader. This is Victor Zhang, who is documenting his experience on YouTube. So I can't wait to chat to him here at the clubhouse. I can see the limo pulling up now. Here he comes. Victor, hello. Welcome to Copy Traders Club.
Hello, Gavin. It's nice to be here.
Well, thank you for joining us. It's a thrill to have you here as our first ever copy trader guest. Before we proceed to the VIP lounge, as a guest, you need to be signed in, and that is done by answering a series of quickfire questions. Ready for those?
Certainly. Happy to.
Okay. Username on eToro.
Torovictor. Not very creative, as you can see.
Date you joined eToro.
I joined eToro on September the 3rd, 2019.
Year of birth.
I was born in 1974.
Marital status.
Married
Kids.
and 2 children.
Location.
In Singapore.
Profession.
I'm a global director for new business development.
Name one of your investing heroes.
Well, I don't have a single investing heroes, but millions. My heroes are the millions of people who are rich but not famous. Those ones that have reached financial freedom through purely passive income. Those are my heroes.
Good answer. Name one of your favorite investing books.
My favorite book would be The Richest Man in Babylon. It's a very, very old book, but it's one that I like the most.
Okay, great. That completes the formalities. Let's proceed into our VIP section here at the clubhouse. Victor, we're going to walk down the marble-floored hallway, past the elegant fountain, and into the splendid Copy Traders Lounge. Victor Zhang, aka Torovictor, are you ready for this magical transition?
Well, this is grand. You have a really sweet setup here.
So here we are now, Victor, relaxing on these big burgundy sofas in the Copy Traders Lounge. The perfect spot for a good old chit-chat. Let's kick it off with discussing how you came onto my radar. Do you know how that was?
I'm guessing it's my YouTube video.
Yes, well, I looked at your YouTube videos, but the reason I was sent onto your channel was our mutual friend who also makes YouTube videos.
Ah, right. Philip Felix. Andrew Haddon, otherwise known as Philip Felix on eToro.
That's right. That's exactly it. I'm looking forward to the episode of this show where he doesn't get a mention.
Yeah.
Because he comes up a lot.
Yeah.
But that's the value he brings. You know, any self-respecting copy trader should be all over his videos. I'm pretty sure you agree. I know you're a big fan.
Yeah.
And I saw you commenting on his, and I think he mentioned that he liked your videos too.
Yeah. We have a mutual respect to each other.
So you, as I mentioned, are a copy trader who happens to have a YouTube channel. Very interesting videos there. Obviously, I'll put a link to your channel in the show notes, or the listener can look up Victor Zhang on YouTube.
Yeah.
That's Victor spelled Victor and Zhang spelled Z-H-A-N-G. So I see on one of your videos that you've got 25 years of investing experience. So why copy trade?
Yeah, that's a very good question. Personally, I think Copytrade is a great innovation by eToro. It really brings opportunities, access to investment instruments that were not easily available to common retail investors. Right. So actually, for this question, there are probably two parts. Number one is why would I not trade myself? Right. So first of all, I don't trust myself as a trader. I'm very hasty in jumping into investments. Then I get emotionally attached to my investments, and I'm more often too late to sell. Therefore, I missed out on the greatest amount of a profit. Also, I don't have the time to look out for all the latest innovations, the latest companies, the latest trends. Work and family is taking the majority of my time, so I don't have time dedicated for looking out for new investment opportunities. I'm also quite overwhelmed by doing fundamental analysis myself. It's quite boring. You got to process a lot of data, a lot of documents to read. I can't do that. I'm fascinated by technical analysis, but I don't trust them, right? So for all of these good reasons, I don't trust myself as a trader. So I do not want to be a stock picker myself. I've done that before. As I said, I have 25 years of experience investing. Every time when I was bold enough to go pick some stocks, I end up losing money. The second part about copy trading, right? So with copy trading on eToro, you get access to being able to short the market, short stocks. You have access to gold, precious metals. There are people on eToro trading foreign exchanges, which is very difficult for an individual to do. There are also people trading things like commodities like coffee, wheat, flour, oil, and gas. Right? So eToro provides just huge array of opportunities to help me to diversify my portfolio. Another aspect of copy trading is I have also access to many different investment strategies, right? So if I copy 10 PIs, they each will have a very different strategy. And also there are some who are focusing on leveraging on market momentums, but there are also the ones who focus on just being completely uncorrelated to the stock market, right? So I believe in order to achieve my ultimate investment goal, I need to be able to leverage on all these options, and copy trading provides me that possibility.
Wow, that's a fantastic answer, Victor. A very long one. That's all we have time for tonight. The first part of that answer, in fact, part one, was very honest and self-aware. And that is a strength in investing, as in life in general, knowing your weaknesses and finding a way around them. We're quite similar in age, and I have much less investing experience than you, active investing experience. But you're absolutely right. It's a lot of work, and you can be full of self-doubt. Maybe you're not the best person to be making these decisions. Maybe there's other people who can do it better for you for next to nothing.
Exactly.
Which is a miraculous thing.
Yeah. In fact, I mentioned one of my favorite books on investing is The Richest Man in Babylon. Yeah. It teaches lessons about saving, then a lesson about investing. And one of the very important lessons in there is that you should give your money to the professionals to manage for you. Mm-hmm. Right. So this is very important. We do pay the fund managers a fee. We pay the PI a fee, not directly, but through the platform. But I would say I'm much more confident having these people managing my money than managing the money myself.
Yes, and I'm sure you talked about mutual funds. If you've ever had a financial manager prior to this managing mutual funds and taking their fees year on year and justifying their existence by rebalancing your portfolio. And, after a few years of that, they earn more out of it than you do. So those are the old ways. Those days are really gone. And with something like copy trading around, there's almost no reason for them to exist. And people worry a lot on eToro about how much you know your PIs, as you should. But I had money in a mutual fund a few years ago, and I had no idea who the individual was who was making my decisions. They didn't make YouTube videos explaining themselves or anything like that. So that's a very interesting answer you gave. What I like about your channel is that it's one of the only places I've found that is asking similar questions to me. You say on your channel that you want to hear from successful copy traders. And so do I. That's why I'm making this podcast. And I'm sure you will have forgiven me for using that snippet from one of your videos at the end of the previous episode. When I told you I was using a snippet, did you know it was going to be that one?
Yeah, it's an interesting snippet to put into your last video to promote this episode. I think it's great. I loved it. I also sounded quite full of myself in that snippet, but you got to put it into context, right?
To be fair, you do go on to say, well, let me tell
Sure.
the listener what the quote was if they didn't hear it. I am the best copy trader I know on eToro. I say this as a fact because many copy traders on eToro make their profile private, so I don't get to see their details. And none of the ones I actually looked up achieve the same level of gain, at the same skill, and with the same level of diversification. That's the full quote. Although I notice you're throwing in lots of caveats there, backtracking a bit from your initial claim. You can always say, oh, they made more than me, but they weren't as diversified. That quote that I mentioned just now, that should, I hope, motivate a few copy traders with better stats than those on the Torovictor stats page to step forward in an effort to put you in your place and tell us how wonderful they are.
Exactly. I was hoping for that too. I was hoping someone would come in the comment section and say, actually, I made more. Look me up. I was hoping for someone would do that, but nobody did.
Well, let's put the word out. You are currently the undisputed best copy trader in the world. Until further notice.
Yeah, on my iron throne.
Yeah, so let the challengers come forward. So would you like to have a little look at your bio now?
Sure.
So Torovictor in Singapore. Risk score in the last week is 5. Would you like to read what your bio says? And you can...
Yeah. I have a very simple bio here. All I said is as in backstroke swimming. In fact, if you look at my avatar, it's my 2 children, a boy and a girl, doing backstroke swimming in a swimming pool. So I wrote in my bio, as in backstroke swimming, I like to be able to float comfortably over the water while making steady progress forward. I hope to achieve this by copying the best investors who manage both growth and risk well.
So moving on to your stats, as you say, you've been on the platform since September 2019.
Mm-hmm.
You started off with a little red month, as most people do. So that was 4 months of 2019, finished with 1.61, and then the first full year, 2020, 48%. When you started on eToro, did you have any idea of a target for annual return?
No clue. I basically I went on to eToro completely clueless. I made many mistakes in those 4 months of 2019. The reason why my numbers in 2019 didn't look so good was because I was copying one person and he was investing very heavily into VIX, which is the opposite of he was betting against the market, but the market was going up. So he basically pulled down my overall performance. Eventually, I got rid of him. But then I think during those period of time, I start to understand the various instruments available on eToro and the various PIs and the various strategies. By the end of 2019, I was a much more confident copy trader.
Okay, and 48% is not to be sniffed at in any circumstance.
You mean 2020? Oh, 2020, Yeah, I'm proud of the result, 48%. But then also understand 2020 is an extraordinary year. I do not expect to have 48% every year, although 2021 started as if it was going to be that 48% hands down. But if you look at the 2021 results, first month 4%, February 1%, March -3%. This is not telling even half the story, right? So January it went up, right? So at a peak I was about 8%, but by the end of the month, my gain was cut by half. And February I was up by probably 12% at this peak, and I was lucky to break even in February. And March, at the worst, I was perhaps down by 10%. But with just the recovery earlier this week, I managed to recover to -3%. Who knows? By the end of March, perhaps I'll even show a little bit green. So, a year from now, people look back at these stats and go, "Oh, nothing had happened in those 3 months." But when you're in the game, a lot of things actually went by in the short 3 months.
Yeah, well, you obviously keep a very close eye on things.
Yes,
If you know what, even during the halfway through a month, how you're doing.
exactly.
It's interesting. I mean, I don't keep that much of a close eye on it until the month is out, because I know I'm not going to change anything, basically.
Yeah.
You're quite a fiddler, it seems, when it comes to your approach. 206 trades for someone who's essentially a copy trader. That's a lot. But that's evidence of your policy that we will come on to later. Now let's move on to talk a little bit about your strategy, Victor, which we've alluded to a couple of times. I call your strategy the Premier League. You have something like 30 PIs. You reward the good ones with increases in cash and deprive the poor performers of funds. Then you ultimately relegate the bottom few and promote the top few on your watch list, like a gardener pulling out the weeds and watering the flowers. Have I got that right?
Yeah, that's pretty much my strategy. I think this is possible because I have a fairly large account. Therefore, I'm able to keep about 30 PIs, and that's probably as much as I would want to have. Any more than 30 becomes very difficult for me to manage as well. And I do it in stages, right? So I did not arrive at 30 PIs in a short duration. This is built over time, over more than a year. And I do not advise people with smaller accounts to do this. If you're starting with just $1,000 for investment, it used to be that you can copy up to 5 PIs, but with a new rule from from eToro, minimum copy is $500. With $1,000, a copier can only copy 2 PIs today. So in my case, the portfolio took shape over many months. I also started just with a handful of PIs. As I added more funds to it, I wanted to diversify. I wanted to try many different strategies. And also, PI, after all, is just the one single person. It's not a fund managing company like a mutual fund. So the PI something could happen to the PI, right? So he could be emotionally attached to his investment one way or another, making mistakes. He could perhaps suffer from illness or mental breakdown, right? So there are many possibilities that a single PI could go wrong. And with a larger number of PIs, that I can try to mitigate that risk. I know that I spoke about building trust with PI, but perhaps trust is not the best word. The better word would be comfortable. Right? PI as a single person, it's not really possible to completely trust the PI. What if the PI just had an argument with his wife? and he makes some erratic actions with his investment, and you would suffer as well. So it's about getting comfortable with the PI that you copy, right? So the ones who can consistently manage, especially the risks, are the ones that I put into my comfort list. Yeah. So another reason why I keep a large number of PIs is perhaps for fear of missing out. What if I just missed out the PI that would have an explosive gain the next month, right? So I just keep a bunch of them and hoping some of them will turn out really well in the next month. I keep growing my portfolio and keep on trimming, precisely as you said, like as a farmer taking out the weeds. The portfolio took shape over time. And the way that I do it is that as I get more comfortable, more familiar with the older PIs, I could then focus my effort on monitoring the ones that I have just recently added. So that way, I'm not managing 30 PIs. I'm really perhaps paying a lot of attention to 5 PIs at any moment. The older PIs, the ones that I'm comfortable with, as long as they are delivering consistent performance, especially beating the market indexes, I leave them alone. Also, I stop adding funds to the older PIs when they grow too large. A normal trimming process probably takes me about 3 months. I think 3 months is perhaps the minimum amount of time for you to really be able to understand PI's strategy and behavior. 6 months will be better. At 12 months, you understand a PI way better.
And how much, when you say you're monitoring their strategy, are you watching these guys like a hawk? You say you keep on top of your portfolio and the increase or decrease on a weekly basis, every few days, every morning, first thing, check your eToro account?
No, I do take a look at I do look at my eToro account every morning, but I think what I'm looking at are really the outliers.
Mm-hmm.
Who are the ones who really performed well the night before? Who are the ones who went against the market and for what reason? Right. So if everyone is just going with the market, I'm comfortable. I don't do anything. But if I notice someone who's having a bit of abnormal numbers, either too large a positive too large of a gain or too large of a loss, I take a closer look.
Okay. Well, it sounds like a lot of work, what you do. If I recall, your initial answer to the question why copy trade, among it was because it's so much work to invest. I agree that copy trading shouldn't be no work. It should involve work. But you're developing quite a workload, it sounds. Maybe it's less than it sounds if you're really only concentrating on a few. So you say 3 months is the time you would give to any of your PIs to prove themselves? Do you, after the 3 month period, if a PI is not performing, does he get the chop or does he go into the sin bin?
Yeah, a few things could happen in the 3 month. I usually have a 20% stop loss, right? So occasionally some PIs will hit the stop loss and they're gone forever. Then I would also take a look at, usually every month, I take a look at how the PIs have been performing against the two indexes, Nasdaq and S&P 500, right? So the ones who consistently not able to perform at market level are the ones who get to chop.
Well, I admire the fact that you have developed a process, and it seems to be one that you're very comfortable with and has a logical progression and is delivering you the results in terms of quality PIs that you were looking for. When I watch your videos, you seem quite content that you've hit upon a strategy that works for you.
Mm-hmm.
And that's the best that any of us can do.
Mm-hmm.
It wouldn't be a strategy that suits me. I'm a very different approach. Maybe my small number of PIs will grow over time. I'm already finding it hard to stick to my 4 because as time goes on, I see more and more incredible PIs that I think, wow, I'd love to have them in my life. My original plan is to stick to my 4 for 12 months. Part of my concern is that if you spread the net too wide, you're guaranteeing that you're going to have some turkeys in there. If you've got a 20% stop loss, you're locking in losses in a similar manner. The counter argument to that is, what if one of my 4 guys collapses in performance? Then it's really going to hurt me. So I guess it comes down to trust or confidence or comfortableness, as you were saying earlier. My 2 main PIs are guys I'm really comfortable with at the moment because everything's been fine with them. But I think I believe in them and their process to the point where I'll ride out the lean times with them. I hope that's the case, but we'll find out. Nobody knows. It's fascinating to hear different strategies. I'd love to throw out the net and gather in lots of different copy trader strategies. I'm sure there's several different paths to nirvana. Hey, hope you're enjoying today's show. I'm sure you've subscribed already. If you're a successful copy trader, happy to share what you've learned. There's no need to have a public profile. Please get in touch. Otherwise, listener, the bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. So let's talk a bit more about trust. The word trust did come up quite a lot in your videos. Trust, confidence, comfortableness. Your complicated system, or what seems like a complicated system to me, seems to be born out of a fear that you're going to choose a PI badly. So you get a whole bunch and accept that some of them are going to be poor. And you mentioned that it's a question of trust. You have to develop that in them. So that's one of the key elements of copy trading. And it's one of those subjects I want to ask questions about to gather ideas from others about what leads them to trust their PIs, or what PIs feel they ought to do to gain copiers' trust. Okay, so one of my goals in this podcast is, by the time I get to episode 100 or whatever, I could be able to put together specific episodes about subjects like trust based on all the opinions I've gathered, where I edit together snippets from all the episodes, where all these guests are dropping these knowledge bombs. I could do one on what everyone has said about trust or risk or diversification or the time scale for copying a PI. I think those would be very valuable. So let's get some wisdom from you on the concept of trust. You say in one of your videos that at the selection stage, why should you trust any of them? Why indeed?
I don't. During the selection process, in the initial selection process, I don't trust any one of them. The only reason I would pick a few would be because their stats look good and their portfolio appears to be interesting. That's complementing what I have right now. Either that they're performing better than a similar PI that I have right now, or that they bring a very different perspective to enrich my portfolio. And also their portfolios are at a stage that can be easily copied and maintain sync.
Okay, we'll come on to those things, but that's another point that I wanted to mention. In one of your videos, you said that finding PIs who are copyable even by the smallest amounts are the most trustworthy. Or that's an indicator that they are deserving of trust.
I don't think I ever said that, actually. I saw that in your notes. I found that a bit interesting. I think Andrew Haddon probably keeps on talking about the minimum amount. For me, however, minimum copying amount is never an issue for me. I have a large account, right? So that's never one of my concerns.
So perhaps I did get it wrong.
Mm.
It's been known to happen occasionally. So you don't think that being copyable by even the smallest copier is evidence of a PI's good character or anything like that?
Not to me. I'm sure it's important for people who are just starting up, but for me, that's just not a issue for me at all.
The way I see trust, you can break it up into two categories. Trust their investing chops, trust that they're capable investors with a cohesive strategy. And the second point would be to trust them as a person, trust that they're an honest and reliable business partner. So let's talk about those two things. Trust in their investing chops, for want of a better word. I was wondering what indicators might there be of a lack of trust? And I've made a few notes here of some, so I'll run through them. Inconsistencies between the claims and the practice. They define themselves as value investors, but when you check their portfolio, they're 50% in Bitcoin. They say their risk never goes above a 3, but you can see that it does. They relied on flawed calculations to blow their own trumpet. For example, a failure to understand compound interest, something like that. They say 2% a month. Yeah, I want to make 24% a year. But 2% a month compounds to more than that, closer to 27%. Or they say they don't use leverage at all. But when you look into it, you see that they do in some form, like leveraged ETFs. Are those the kind of things you look out for those kind of things, being a keen student of the Felix Falix channel?
I think you have really elaborated very well. If you had asked me that question, it would be difficult for me to define exactly what criteria I'm looking for in terms of trust. But I think you summarized it very, very well. Ultimately, I think I look at a higher level of things. So I think the PI should put the money where their mouth is. I think the most important thing that I look for is performance against the market, right? Each PI has his or her own strategies. And according to the strategies, then they would be using different benchmarks, right? For example, a person who's investing into tech stocks needs to be benchmarked against the NASDAQ. A person who is more value-based can be benchmarked against S&P 500. The ones who is looking at trading cryptocurrencies have their index to compare against. So what I'm really looking at is, are the PIs performing alongside the markets that they should be benchmarked against? Are they making
Right.
any erratic actions so that they veer off from the market norm? Those are the signs I'm really looking for. The ones that I trust are the ones that become more predictable to me.
Okay. Length of record. How important is that for you?
To be honest, it's not too important for me, because of the fact that the eToro as a platform itself has not really existed for many years, and it hasn't really gained popularity for too long. I've only got to know about eToro in late 2019, even though I have had 25 years of investing experience. Being on eToro for just a year and a half doesn't mean should not discount all my previous experiences. When I got on eToro back in 2019, there were a handful of really popular PIs that everyone is copying. I felt a bit cheated when I got onto eToro, because eToro claimed to have 8 million users. But when I got onto eToro, I noticed there's not too many choices of the PIs I can copy. And every PI, the most popular PI at a time, probably had less than 10,000 people copying them. Did not seem like a very large platform as it was advertised to be. However, in 2020, I noticed there's been very high growth, both in terms of number of people on the platform and also in terms of PIs on the platform. So nowadays, a new copier would have a lot more option, a lot more PIs to choose from, right? So I think eToro is definitely going in the right direction. And given this fact, I think it's not really realistic to only look at multi-year track records. If I can find someone who did really well in 2020, it's an extraordinary year, but it also went through some of the worst market corrections in history and some of the best rallies in the history. I think it does give some data for us to use to filter and choose the PIs we want to copy.
That's interesting because the issue of length of record is one that you just hear over and over again, people saying, I am only interested in people with a multi-year record. And I understand why they say that. Generally speaking, that's probably pretty good advice. A long record is good, but the more I learn about eToro, the more I realize that the information presented is really for guidance only. It's not meant to present the full picture. You still have to do your own research into the PI. Like I say, the stats, we can't rely on those 100% for the reasons such as we don't know when deposits were made throughout their history. We can't tell how much of their bank they had in individual trades or at individual times. We don't know when they became a PI. You know, there's probably other factors which I can't think of at the moment, but they limit what you can learn for definite from the record that these guys have on eToro. All else being equal, it's better to have a long record than not. But and I think it's reasonably good advice to give to people. I don't follow it myself either. Most of my bank is in two guys who, between them, have less than 2 years. One has just got to the year mark and the other is about 10 months. Let's bring it back now to what we were talking about a moment ago, which is trust. We dealt with what you look for in a PI in order to trust that they know what they're doing as an investor. The second issue is trusting them as people. Both my main PIs are quite active on YouTube. They have their own channels and they make videos regularly and they speak directly to people. I feel it's to me about their investments, about their thoughts, their personality. You get a good taste for who they are, what they're all about. Or maybe they've got their own website. I see quite a lot of PIs have their own website, which can be a great resource, but the quality varies in terms of content and frequency of updates and so on. I mean, a YouTube video might not suit every PI. For example, one of my PIs is a volatility trader. He trades two things, it seems, SVXY and UVXY. And how do you make a video every week on that? It's not possible. It's easier if you're making stock analysis videos because there's an endless stream of them. You asked previously in the chat, or I referenced your question in one of your videos, which was, how can I trust anyone at the selection stage? If a PI has a presence on YouTube and a whole history of videos and hours worth of themselves looking into the camera, would that feed into whether or not you can trust them as a person?
Communication is certainly very important. The more a PI communicates, the better the PI will be able to build trust with the copiers. But then also results speak louder as well. I think both of this is important. I think I want to expand on this a little bit. There are perhaps ways to try to learn about the PI. For example, using the virtual account, right? So you can try to copy a PI in the virtual account. I heard it's bugged. It doesn't really track the performances very well. But regardless, I am a bit of a man of action. I can afford to put a minimal amount to the PIs I'm interested in. and to really try to see how the PIs perform and also how they communicate over, let's say, a 3-month period. I think it's much more tangible for me to, a much more tangible way for me to understand the PIs. And also, since my money is in there, my skin is in there, I am motivated to try to understand them more. It just does not feel the same way if it is done using a virtual account.
Yes, they say you only really get to know a company once you've bought into it.
Yeah.
So it's a similar idea. So if there was a way to know PIs better, such as long form interviews on something like a podcast, do you think would that help?
It certainly would help. For example, Samosa King, the PI that you interviewed in your last episode, I did not really know much about it, except because you are raving about him. So I just add him into my portfolio. I was just watching how he's doing. But last month is certainly not a good time for monitoring API's performance. Anyway, so I'm keeping him. So I'm going to keep him for a few months to try to understand why you were so happy with him. But listening to your podcast, your interview of him, I really understood that he is an investor. He is not a one-hit wonder that had 95% gain in January and just become normal again for the rest of the year. Listening to his experience, right? So he started doing business when he was 13 years old. That he's a full-time investor. All the stories that he has shared, it gives me, allows me to understand him a lot more. To realize that that 95% gain in January is perhaps repeatable, maybe at a smaller scale in some other parts of the year. Right? He's continuously looking for new opportunities. So that would make me a lot more comfortable having my money managed by him.
One other element of whether or not a PI is to be trusted is a subject very close to your heart. Do you know what I'm about to say? Desynchronization, which is a word that could probably set you off on a half-hour conversation.
Sure.
You've made some great videos about it, I have to say. Get in sync or get out, as you say. Why is being in sync such a big deal?
On the trust topic, if a PI is making himself easy to sync, then as a copier, you know that he's not just thinking up for himself. He's also he's a I would want to be copying a caring PI who cares about the copiers rather than just himself. So why is sync so important? Being in sync is perhaps the most important factor when it comes to copy trading. This is to make sure the PI's interest is fully aligned with my interest. Both the PIs as well as the copiers have to look out to make sure that they're synchronous to each other.
If you start a copy and some of the positions have already moved a fair amount between the moment he bought in and the moment you start copying, desynchronization is automatic. And if then something rockets up from there, that multiplies that effect. So why does expecting a PI to constantly be in sync, why is that not penalizing him for performing well with particular assets if he's expected to then sell them or reduce his position size?
Intuitively, if I'm putting $1,000 to copy your trades, then I would like my funds to be allocated according to the market value of your holdings. Right? So that's intuition. However, if I'm putting $1,000 to you, my money is allocated not based on the current market value of your asset allocation. It's allocated based on how you invested them, say, 3 months ago. So the moment I put my money in, you and me are desynchronized. You as a PI, you are managing funds according to a certain allocation. But I am copying your actions, buy and sell actions, based on how the funds is made up 3 months ago. Caring PIs would understand this issue and then try to make it easier for the copiers to stay in sync. In order for the PIs to help the copiers to stay in sync, they need to make some sacrifices. They need to reset their portfolio from time to time. They need to sell some of the big winners, right? So there are sacrifices that the PIs need to take. A caring PI would do that, but a more self-centered PI wouldn't. And that will hurt the copiers, because the copiers will constantly wonder, how come this PI is going great? He's going 10% a month, and my portfolio is only growing by 2% a month. I discovered that back in June, July of 2020. Then I started writing to each one of my PIs and spoke to them about the desynchronization issue that I discovered. Some PIs reacted very positively. They said, okay, I understand this issue. This is what I'm going to do. These are the actions I'm going to take in order to solve this issue. So some PIs took the action of completely resetting their portfolio, including selling holdings are like 1,500%, right? So these look great in their portfolio, even though the copiers cannot benefit them. So some PIs took those actions. They took that sacrifice, making themselves not looking as good as how it could have been. That's one type of PI that just gained my trust. There are PIs who responded to say, oh, this is the first time I heard about it. I will look into it, but may not take an action. Then there are some PIs who responded, said, okay, I did not know about this, but I'm not going to do anything about it because I have my strategy. You copy me if you want to. If you don't want to copy me, that's fine, right? Your decision. Then, of course, there are also PIs never responded. And I think you would know which are the PIs that I kept and which are the PIs that disappeared from my list.
Sure. Well, the clue is in the name. They're supposed to be popular investors for the people.
Exactly.
So they do have to put their own needs behind those of their copiers if they wish to remain popular investors. They can just go back to being investors if it's all about them.
Yeah.
March 2020. That features in your videos. You've made a wonderful video there called 3 Godsend PIs on eToro who saved me from the market crash in March 2020. As you mentioned, there's been a lot of talk recently about a market crash. Was that a crash we just felt recently, or just a little correction of certain types of stocks? Are we headed for a big crash in 2021? So I'd like to talk about that a little bit. One of the highlights of that video was where you included the immortal line, "By March, I decided to panic." Tell us a little bit about that video, maybe, and how that would feed into what your approach would be if there was another sudden crash.
Yeah, so March 2020, it was one of a series of unfortunate black swan events since 2016. It happened, the pandemic completely caught people off guard. People in the market were completely disoriented. The reason why I said by March I decided to panic was because we already knew about the pandemic in January. The Chinese market had already panicked. But after Chinese New Year, the Chinese market recovered, right? So I thought, okay, no problem. Now just a little dip. Nothing's going to happen. And then the US market was still going for historical highs, all-time highs. And then all of a sudden, everything went downhill. And there just didn't seem to be a bottom to it. And nobody knew which direction anything was heading, right? So if you think about market was dropping, oil was dropping, Bitcoin dropping, everything's going down, right? Usually you would think that something goes down and something would go up. But it didn't happen that way. So there was just no way to predict how far we're going down and when we'll ever come back, how long that recover is going to look like. Is it a V-shaped? Is it W-shaped? Is it L-shaped? Right? So all sorts of theories out there. So when I panicked, I decided I needed to look for an investment strategy that is completely uncorrelated with the market, whichever direction it was going. And this is when I found the three PIs I mentioned in my video. So they are doing what's so-called scalping, right? So they will do these high frequency trades, betting on these micro movements on the market, and you're able to profit from it. So I was lucky that I was able to find these people, and also I was lucky that it took eToro some time for them to ban such practices. I don't know why they banned such practices. It was a good way of making money, but I think I was lucky to find them, and they did pull me out from a very deep hole in March. This time, it's not like how everything was crashing, right? We can clearly see that it's a sector rotation, right? Dow Jones is getting to all-time high, while NASDAQ is dropping, right? So there is money coming out of a tech stock and going to the more cyclical stocks. So it doesn't feel, even though my investment has suffered a lot because I'm heavy in technologies, and I still believe in technologies, but I think it's actually a healthy correction for the market. This will help the technology companies to prepare for longer term growth. So I have not panicked this time yet. I hope I don't have to.
Yeah, so your panic not only stopped the bleeding, but they started making your money?
Yes, I did not get rid of all my equity traders. Some remained. And as you know, Wingomer stayed, right? Because Wingomer was also taking a lot of maneuvers during that period. I was watching pretty much every single one of his trades. I was talking to him constantly to understand what he's doing. So I felt that I went through the up and downs with Wing. And that's probably how he has he's the most dominant PI in my portfolio.
That's very interesting. The process that you went through when you decided to panic, it all worked out for you. In hindsight, it's great to look back at that video and to know that with 2020 vision, it was all fine in the end. Is that something you would consider doing again if the situation was to present itself again?
I wouldn't want to. I think as investor, we all hope for a steady growth, predictive return, right? But I'm sure these things will happen. I think everyone understands that we will have a series of, during this upward pricing channel, we will have occasional corrections here and there. We don't need to panic. But then at the same time, many people are just waiting for the big one. And that certainly would happen at some point in time. We need to be prepared for it. In my eToro watch list, I have a watch list called Market Crash. I have a collection of PIs who I have observed to have done well through the various market corrections. I have not activated them, but and I hope I don't have to. But if the big one really hits, I will activate them because these guys are the people who bet against the market. And even if a person doesn't have such an accumulation of PIs in that watch list, eToro itself offers a copy trading portfolio called panic mode or panic button or panic mode. That's probably the easiest way to deal with such a unfortunate event.
That's interesting. I didn't know that they had such a copy portfolio.
Yes, it's a copy portfolio called panic mode. I think what I'm just guessing what's in it is perhaps ETFs that bet against the market.
Well, that's interesting that you say you have a bunch of guys in reserve should the shit hit the fan. That's really what my question was. I was wondering, do you have such a group ready to pounce when the pressure's on? Well, it's been fascinating talking to you today, Victor. I've learned a lot. I will be mentioning frequently in my regular episodes new and interesting videos on copy trading, so I'm sure I'm going to be directing the listener to your content going forward, Victor. I want to make sure the listener stays on top of all the very best eToro content out there, and you're making a significant contribution to that.
Yeah, thank you, Gavin. Thank you for that, and thank you for inviting me to this podcast.
Well, it's been most illuminating. Thank you so much, Victor. Maybe we'll do it again sometime.
Thank you, Kevin. Looking forward to it.
Cheers.
Thank you. Bye.
My thanks to Victor for today's chat. Fascinating to hear of the meticulous meritocracy he has in place for gauging his PIs. How many other copy traders do something similar? I would never have thought of doing such a thing myself. The things you learn, eh? The next episode is a regular episode where, among other things, I will be discussing my main takeaways from last month's discussion between eToro CEO Yoni Asya and a select number of elite PIs, as well as some of his other recent online appearances. Following that, we have another couple of conversation episodes coming up with some brilliant guests. Until the next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.